Ms. Salmond, if we look now then to wider economic arguments and we look at the relative fiscal balance between Scotland and the rest of the UK, you said that every Scot would be £500 better off after independence. But the fact of the matter is we have this massive fiscal deficit. We're up to our eyes in debt. This isn't £500 cash in hand. This is £500 less in debt.
No, what I've said is that the fiscal balance of Scotland would be 2.7 billion stronger than that of the United Kingdom, and that represents £500 for every Scot or £1,000 for every family. And I've also said that with that fiscally stronger position, you could invest more, you could borrow less, you could save for the future, you could protect vital services, or any combination of these three. And that seems pretty clear to me, but it is a fact, Isabel, that Scotland's fiscal position in the last estimation in 2010 and 11 was 2.7 billion stronger than that of the United Kingdom. And believe me, as First Minister of Scotland right now, I could do with £2.7 billion either to borrow less or to invest more in the Scottish economy.
So, Mr. Salmond, you don't think that this money has to go into paying down the deficit as a priority?
Well, Isabel, I've just explained to you, with 2.7 billion, you would have a range of choices. You could invest more, you could borrow less and save, or you could protect vital Scottish public services, or a combination of the three.
Well, what about paying down the deficit?
Is a substantial. Well, that would be in the borrowing less aspect of that, Isabel. We actually pay for the deficit within the fiscal calculation in GERS at the present moment. That's within the figures, Isabel. But this is a statement of fact on the last estimation that Scotland was in a relatively stronger position to the rest of the United Kingdom to the tune of £2.7 billion because we pay 9.6% of the UK revenue but only receive back 9.3% of UK expenditure. And that, again, as a calculation, is the equivalent of £500 for every man, woman and child in Scotland, or just over £1,000 for every family. And that would be deployed either by investing more, by borrowing less, protecting public services, or a combination of the three. That would give a Scottish government much more fiscal flexibility than the UK government says it possesses at the present moment.
So in terms of getting the borrowing rate, you know, getting the fiscal deficit down and securing a good borrowing rate, you need a certain obvious credit rating. If you're not paying down the deficit quickly, the argument is that the markets thump you and you don't, you know, you get a bad credit rating. If we can look at a piece on Scotland on Sunday today, in fact, they've got the Treasury's most senior civil servant, that's Nick Macpherson, is saying that an independent Scotland would have to pay higher interest rates for its debt finance than the United Kingdom as it seeks to convince the world's investors that it's a safe bet. Unless you're paying down the deficit really quickly, you feed into this idea that you're not a safe bet, don't you?
No, I mean, incidentally, I preferred the world where senior civil servants didn't act as mouthpieces for Treasury ministers, but that's perhaps another issue. But let me tell you why that statement is wrong. Because Scotland, as we've just discussed, is in a stronger fiscal position in the rest of the United Kingdom. And credit ratings are allocated in two ways. People look at the fiscal position and they also look at the prospects for the future. And of course, a major thing that Scotland has relative to its size that the UK doesn't have at the present moment is a huge collateral of almost $2 billion of the future estimations of the worth of North Sea oil and gas. Now, $2 trillion, that's $2 trillion, is a huge amount of collateral. So both the current stronger fiscal balance and that collateral for the future will secure Scotland a very effective credit rating indeed.
Fitch is one of the credit rating agencies actually making that point earlier this week, was saying that because the price of oil and gas is so volatile, that's another reason why there are so many uncertainties about trying to fix what would be a borrowing rate.
Well, the point is that the current estimation, and that's taking, I mean, that's at $100 real oil price, which I think most people would regard as a pretty conservative estimate, certainly lower than it is even at the present moment going forward. $2 trillion would be a reasonable estimate, but I mean, obviously people look at collateral for the future. Why is that more important? Well, it's more important for Scotland and the rest of the UK because $2 trillion collateral for a country of Scotland's size is roughly 10 times the collateral that the UK has at the present moment. So if you're talking about a stronger initial fiscal position, the fiscal position now, and that collateral for the future, then you're talking about a very effective and promising position for Scotland to start from. Of course, where Scotland ends up will depend on the wisdom of the policies that we pursue. And our case, of course, is that the austerity policies of the UK government aren't working, that we need capital investment in the economy to push growth forward. That in itself, economic growth, will reinforce the fiscal balance and reinforce the strength of the Scottish economy, as well as benefiting in economic and social terms every family in Scotland.
But Ms. Salmond, there's another point that leads on from that. If you have a currency union, you're not going to be able to have too much divergence in fiscal policy because the markets will punish that.
Well, again, we refer to the same point. I mean, I've been making this point for some weeks now, and I've yet to hear a refutation of it. If you have a Stability Pact which says you borrow the same, and we're in a 2.7 billion better balance at the present moment, that means you have that flexibility of £2.7 billion in 2010 and 11. It'll be interesting to see what 2011-12 will be. I suspect it might be even greater than that, Isabel, but let's see when the figures come out. That means that Scotland will have a range of flexibility that the UK Chancellor says he doesn't have at the present moment, although my argument would be he should emphasise and put capital investment into the economy to generate growth and future revenues.
In terms of the fiscal pact that you'll come to, we tend to see it as a one-way street, but in fact it would be in Scotland's interest, wouldn't it, to have limits on borrowing, on liability and debt in case there are defaults in London. If a big London bank fails, we would want reassurances about how much we'd be on the hook for, presumably.
Well, I mean, we proposed keeping a sterling zone because we think it's convenient and it's the right policy for Scotland. We also think that the productivity rates, the underlying position, the thing that really matters about a currency zone, that is the productivity position between the two countries. They are roughly aligned between Scotland and England. Scottish export productivity is a bit higher, English service productivity is a bit higher, but they're basically the same. That's an optimal currency area. But there's no doubt there are advantages on both sides. The advantage for Scotland, Scottish businesses, continuity, and from the starting point of independence. The huge advantage for the rest of the UK, of course, is that while the revenues from Scottish oil and gas would accrue to the Scottish Exchequer, as they should do, if Scotland is in the currency union, the protection that oil offers to the balance of payments, that's some £30,000 million, would accrue to the whole sterling area. And basically, I think that any London government will bite our hands off to have a sterling zone given that protection. It's vital for the rest of the UK, as well as being a matter of convenience, and I think the proper policy for Scotland.
But, so of course, you know, it's absolutely the case that the productivity levels are very similar between Scotland and England. But what's interesting about that is that's not what's being punished in Europe. What's being punished in Europe is major sort of indiscipline in spending patterns.
Well, that's a fair point, Isabel, but the underlying tension in the euro is the differences in divergence in productivity, which is about 40% between the heart of Germany and the southern tip of Greece. That's what makes the euro an unstable currency area. An optimal currency area depends on having not necessarily identical, but an alignment of productivity between two countries. That is the argument that you put forward, and that's been backed by a number of economic commentators. But what's very important here is the Fiscal Commission that the SNP government have commissioned, which includes, incidentally, 2 Nobel laureates in economic, is putting forward these proposals, and we'll operate in the best interests of Scotland. But as we've seen, incidentally, from the polls today, Isabel, it's very much game on for this referendum, as the yes side is already closing the gap with our no opponents.
Alex Salmond, thank you very much indeed for joining us this morning. Thank you. And now over